Good morning, and welcome to our client Data Center Business Quarterly Research Highlights and Outlook webcast, running the recent results of the TBR Computing team. My name is Allison Crawford, and I will be your host for today's session. Tech Business Research's focus is to provide business research to accelerate our customer success, and the webinar series is a part of these ongoing efforts to find new ways to support you and your business so you get the most out of your research investment. Computing practice at TBR continues to grow. We will connect our and our analysts every quarter. Through connection, TBR and our analysts will relate our company-centric research to overall computing trends to provide additional opinions and insights into the quarter's performance. In 3 minutes, Senior Analyst Christian Perry will delve into the trends driving the results featured in the 1Q12 Computing Benchmark and the forthcoming 2Q12 Data Center Benchmark report to which you subscribe. Follow Q&A of these trends and how they will affect you. We can send us any questions or comments through the Q&A function or the chat function at any point during the presentation. I'll Christian at the end of the webinar. Or if you'd like to set up a client query for more detailed discussion, please talk with Christian at the end of the webinar to set up that discussion. Now, let me introduce Christian Perry, Senior Analyst on the computing team here at TBR. Christian has covered the data center market for over 10 years for eWeek, Smart Computing, and PC Day. His operations and competitive strategies of data vendors help our clients improve their strategic go-to-market plans and performance. With that, let me hand this over to Christian.
And welcome everyone to TBR's Data Center Benchmark Highlights webinar. In our report, we cover x86 server vendors, proprietary server vendors, and storage vendors from multiple angles, including analysis with key changes and drivers, trends to monitor, revenue and growth figures. We also look at the performance of these vendors from a quarterly geographic perspective, and we provide a market overview, insight on the market leaders, and a core focus that delivers a high-level view of the data center market. As many know, TBR delivers a unique set of highlights that dive deeply into the businesses of vendors in the industry. And in the Data Center Benchmark, we cover all of the major vendors: IBM, Dell, HP, EMC, NetApp, Cisco, and others. So what's the aim here? It's opportunity. Either pockets of opportunity emerge in the data center hardware market, and TBR Data Center Benchmark helps to identify these pockets through a business-focused analysis. The enterprise center is in a constant state of change, and keeping tabs with these changes is a difficult prospect when you factor in all of the various major players in the market. However, the data center space is moving toward consolidation. Business decision makers are tasked with solving increasingly complex IT challenges while facing strict budgets and an IT workforce that has lower levels of specialized skills. Eventually boarding the Convergence train as a route to market success among this evolving data center landscape. To help out these converged product portfolios, we're seeing a steady flow of acquisitions in the data center market. Both storage vendors are bringing both products and expertise aboard to help their go-to-market approach. As customers exhibit an increased need for simplicity, we see a building desire to obtain products from fewer vendors because environments that are more homogeneous are often easier to manage. To optimize servers or optimize storage or optimize networks is no small deal today. And even medium-sized data centers, teams of highly skilled technicians are required to manage and optimize the performance of these systems. Convergence is helping to turn the tide away from this complexity and the requirement for deep levels of specialized IT skills. Those who recognize this trend are quickly capitalizing on the building customer demand. Vendors that don't recognize this trend, or that refuse to acknowledge it as anything more than a minor phase, are missing opportunity. In the first of this year alone, we saw a steady cadence of converged solutions introduced by multiple vendors, including IBM PureFlex, Converged Blade Data Center Solution, EMC vSpecs, and HP Converged Cloud. Types of solutions join others in the market, such as Cisco's UCS and NetApp's FlexPod, to give center customers a wide range of choices for a one-stop shopping experience. As server performance continues to increase, data center customers are looking toward these servers as replacements for more expensive and more complex proprietary servers. Vendors are recently positioning these servers as not only cloud ready, but cloud ideal. Yet the rise of x86 servers, the server market as a whole is feeling the effects of a lingering down economy. For vendors, this means making the most of existing equipment, even beyond the typical refresh cycle. Version continues to be a big factor here, providing IT decision makers with the ability to stretch their server resources across both capacity and time. For vendors, the challenge revolves around delivering a message of both value and performance for data center customers. These decision makers are looking for the biggest bang for their IT buck. We're not seeing willy-nilly spending in this economy, so server purchases are carefully considered to ensure that the machines will handle the necessary application workloads for this foreseeable future. Machines must also be cost-effective from an actual price perspective and from an efficiency perspective. Good news is that vendors are meeting those expectations by keeping a close eye on the data center customer pulse. In 1Q12, average x86 server revenue declined as vendors continued to feel the impact of inflation stemming from hard drive shortages. However, we expect that unit shipments will grow as supply begins to normalize, and we're already seeing signs that the segment is recovering from those shortages, albeit slowly. Although P and L lead this segment, I continues to make up ground in the mid-market with System X-based solutions that deliver the speed required for a larger extent of mission-critical workloads than we've seen in the past. In 1Q12, IBM reported that System X achieved its 10th consecutive quarter of double-digit expansion in growth markets, rising 17% in the countries. There's a prime opportunity for IBM to increase its x86 share, particularly as demand in these markets will only continue to increase for these types of servers. For its part, demand for its ProLiant Gen 8 servers is outpacing the previous generation, but expected reductions in IT spending could inhibit the rate of adoption. However, TBR believes HP offers an attractive value proposition with these servers as it positions them as engines to increase efficiency and utilization by directly allocating the workload and automating server and storage management. So do expect to see reductions in IT spending moving forward in developed markets such as EMEA, which accounted for 37% of HP's overall revenue in 1Q12. Dell will also grow x86 server revenue by better supporting mission-critical workloads with its PowerEdge 12th generation servers and a rapid time to business value via integration of the servers into cloud-ready solutions. Dell is also positioned well to sell comprehensive solutions that include high-margin offerings in its PowerEdge portfolio, thanks to the virtualization capabilities it attained in the May acquisition of cloud client solutions provider Wise Technology. Moving forward, the outlook for x86 servers looks bright. These are a crucial piece of the converged pie, and vendors will enjoy increased sales from the inclusion of x86 servers in these solutions. As long as x86 servers are able to handle the bulk of general-purpose IT workloads, data centers are going to continue to flock to them to cut not only costs, but cut the burdens to IT management and administration that are typically associated with more complex proprietary solutions. There's also a course to start watching in the x86 market. With this new partnership with EMC, we expect to see Lenovo not only gain more server traction in its strong markets, such as China, but in markets as well. The x86 outlook appears bright. It's officially time to start keeping a closer eye on the microserver market. Using Atom and ARM chips are going to start populating the market, and while they won't match high-end x86 servers in terms of performance, they will downright beat them in terms of both size and price. Especially SMB space, that's going to be an attractive proposition for customers that aren't looking for high-end performance. 6 servers won't be the only ones that benefit from the converged trend. IBM are including proprietary servers and solutions to handle intensive IT workloads. But the inherent simplicity of these stacks, customers won't see the same management headaches they might encounter with standalone servers. That's for the proprietary server segment, which at the moment is struggling amid IT budgets and issuing market share. Customer migration to new x86-based systems caused average proprietary server growth to decline 19.6% during 1Q12. IBM is a dominant leader, and positioning integration of System Z into private cloud architecture is a way to increase IT flexibility and efficiency, driving reduced total cost of ownership. However, vendors' power revenue declined 2.2% year-to-year in 1Q12, while System Z revenue declined 25% over the same period. Although demand for high-performance computing solutions based on power servers, the line faced challenges in 1Q12 from weak spending in Japan in the public sector. Nonetheless, the vendor is leveraging competitive Unix server displacements to increase market share and support segment revenue growth. HP, for its part, is leveraging channel partners to enhance its sales and marketing capabilities and ultimately spark growth with its business-critical systems. However, its revenue posted steep year-to-year revenue declines as development all but halted in 1Q12 as litigation continued between Oracle and HP. The lawsuit has finally ended. TBR believes that these legal battles have resulted in some unfavorable market messaging and could inhibit HP's ability to invest in research, development, sales, and marketing functions. The good news for HP at this point is that it won the lawsuit and can get back focusing on business. Oracle seeks to become an engineered systems provider by leveraging Oracle hardware and software platforms. It also continues to expand the Exa line, the Exalytics appliance, along with specific versions designed for industry-focused analytic applications. We do expect Oracle to galvanize share gains in 2012 by laying the groundwork for revenue growth with Exadata, Exalogic, and Exalytics. Are servers doomed to oblivion in the face of increasingly powerful x86 servers? Not at all. We've been hearing for decades that mainframes are on their way out, but as we all know, they're all still here. There will always remain workloads and verticals that serve as perfect fits for proprietary servers, and it's these verticals that typically have the skilled IT personnel to manage the hardware. We expect to see a resurgence in the proprietary server space as new innovation enters the market. For example, IBM's Power 7 Plus is almost here and is building plenty of anticipation among existing customers and potential new customers alike. We expect that prop server vendors will follow suit with technologies that help to propel their systems to new performance heights. Such as IBM are also creating proprietary servers that compete directly against x86 servers. Although it would be difficult to realize significant profits with this type of strategy, it's so difficult to see certain prop servers edging out x86 servers in terms of sales for certain workloads, like big data analysis and certain HPC workloads. Mobile computing and social media continue to make big data even bigger. Data center now expected to actually do something with all of that data that's costing money to store. Vendors, this represents a prime opportunity to add value to traditional storage platforms with analytics and other tools that help organizations make sense of their data. But just traditional data storage platforms are getting an overhaul from a software perspective. So is the concept of data center storage as a whole, starting to expand outward from the array in the form of flash in servers and in storage controllers. These ends are providing customers with more speed for applications, and for vendors, they're opening big doors for opportunities to expand their storage portfolios. In the Q12 storage market, it's no surprise that EMC emerges as the revenue leader. EMC reported strong demand for vMax-E in its second quarter of availability, helped broaden its addressable customer base between lower VNX systems and the higher-end vMax. However, this quarter marked NetApp's 12th consecutive quarter as a storage revenue growth leader. Will it continue? It's possible, but NetApp's ability to grow revenue will be challenged by seasonally slow bookings and tepid spending in the U.S. public sector, or EMEA regions. It's all to keep an eye on these three vendors. As I noted earlier, there is plenty of opportunity in the data center storage space thanks to the relenting influx of data that not only must be stored somewhere, but usable to make sense among tight IT budgets. Dell, for its part, now approaches the data center with a full range of storage solutions, including PowerVault, Compellent, and EqualLogic, and the good grasp of the data center ecosystem that, again, is spreading out from the array. A smarter computing initiative. IBM's storage efforts also target multiple customer sizes and types, and it uses a message of automation, flexibility, efficiency, and cost savings. As data tension increases, customers need to count on their storage infrastructures to tier their storage appropriately so that active data is ready when they need it and data isn't consuming expensive storage. Storage delivers these kinds of benefits to help customers focus on other tasks. It also has a deep, mature range of storage products, including 3PAR, which targets virtual cloud and IT as a service environments. The converged storage platform follows all the standard tenets of convergence: self-managing, self-healing, and self-configuring. I believe that for data centers seeking simplicity, this type of effort from storage vendors will increasingly be met with open arms, adding the TCO savings, and you have a recipe for success. Innovation around technologies such as flash cache and automated tiering. We believe that storage will continue expanding outward the array in 2012. In turn, this will support increased performance and efficiencies across the IT environment. As part of the converged movement, we will all see storage being used in new ways, with servers and networking, ways designed to improve performance up and down the hardware stack. Thanks to the continued use of big data, the storage market looks bright for the foreseeable future. If a certain thing in the data center, its data will continue to pile up, and that's good news for storage vendors. Allison?
Christian. So now what we'd like to do is open up the floor to questions. We've had a couple in. We do want to hear what your thoughts are on the content that Christian just presented. The first question that we've had come in is, what impact do you think Lenovo will have on EMC storage business?
Yeah, I think that this is a smart partnership because here we have two companies that are always looking for new ways to expand their market presence. And what's interesting is that while Dell is building its storage business through acquisitions like Compellent, it have EMC venturing into the server market through partnerships. It's a bit different take from the EMC perspective on building out its competencies. And from a storage perspective, this partnership gives EMC the chance to focus on its core business, which is storage, and let Lenovo worry about the server end that will eventually go into products built by both companies, Lenovo servers, that is.
Okay, great. The next question that's come in is, what do you think the fallout will be for Oracle and HP now that the lawsuit has ended?
Well, HP won the lawsuit, and now Oracle has to support Itanium at basically no charge to HP. Surface, that's good for HP because now it still has a market for its Itanium servers, but you have to wonder how much effort Oracle is going to put into developing software for those machines versus, say, their smart machines. So considering that the Itanium servers are running software, it has to be incredibly reliable. I have to wonder if customers are going to think twice about the future of Oracle on Itanium, even though we know the software will definitely be on those servers. And so for Oracle's part, now there won't be customers moving off of Itanium, at least not initially. So that means now we won't see customers looking for an alternative such as Oracle. And if Itanium customers are going to look for an alternative, I'm not sure Oracle will be a target considering the not-so-great press generated by the lawsuit.
The next question we have that came in is, what is the near-term and long-term impact of these type of servers on the marketplace? I didn't read that right. ARM server, you mentioned ARM servers. What's the near-term and long-term impact of those types of servers on the marketplace?
For servers?
Correct. Yep.
Near term, I think that we'll see much of an impact, at least until the first quarter of next year. At that point, we're going to start to see the servers come out from multiple vendors and multiple form factors as well. One of the interesting things about ARM is that it can fit into almost anything. It doesn't take power. It doesn't consume much power, that is. But you still get decent performance. So initially, we'll see these servers moving into smaller data centers, certainly the SMB space, but also even data centers that need servers in small sizes, but for specialized applications, web-focused and so forth. In the long term, it's tough to say, but I think that ARM and Atom and the server segment as a whole is really going to start cutting into the lower end of the x86 market. When that happens, I think we're a few years out from that at this point.
Okay. We have two more questions that have come in so far. The next question is, do you think any of the storage vendors are going to start pulling away from others in the flash and SSD market?
I think it's tough to imagine one vendor truly separating itself from the pack because all storage vendors are working pretty hard to integrate flash into their storage portfolios. So the price of flash continues to come down, which makes it a more attractive option for, let's say, for customers looking for performance. EMC, NetApp, and others are working really carefully to map out the long-term flash roadmap for their businesses. So in the next few years, we're going to see host-based flash, controller-based flash, and then, of course, flash-based storage cache. And all of these options will give customers plenty of flexibility when it comes to performance throughout the whole hardware stack. And I think they'll find these various options available from all of the major data center hardware vendors.
We actually had two questions come in that seem slightly similar. The next question is, how do you assess the impact of white box server manufacturers, Quanta, Winstron, on the poor revenue growth of the large OEM?
That's certainly going to have a major impact down the road. We're already starting to see major data center customers, Facebook and others, moving towards ODMs such as Quanta because it's tough to beat the value proposition of a vendor who builds servers as they're needed for the customer in bulk and at a good price. And it cuts out all of the in-between administration and all of the associated headaches, even including deployment, because servers are ready to go when they're built, and because they're built to exact specifications of the customers. And the ODMs, for their part, are as they get more business, they're going to become much more adept at serving various sizes of data center customers.
Great. Last question we have that came in. What impact do we think the data center convergence will have on the marketplace? Will companies that move most quickly have a leg up?
We're already seeing companies that have put converged systems and are pretty deeply entrenched into the convergence move or the convergence trend. I mean, NetApp with FlexPod, that's been out for quite some time now, and they have a bunch of customers using FlexPods. IBM put a ton of research into Pure systems, and so we're seeing a lot of money, a lot of time, a lot of effort going into the systems. So I think it's safe to say that all of the major data vendors are both feed in with this trend, and so in terms of impact, it's how they differentiate the systems, what different verticals that they target with the systems. If they do, that's where we're going to start to see some vendors potentially pull apart. If we see, when you talk convergence, you're also talking software, and if we start to see more some say with targeting, the financial sector and so forth, these are nice value propositions for data centers looking for a streamlined solution that works to their business.
Great. Have any further questions from the audience? Hold on. One just came in. Hold on. Any forecast on what the impact of multi-core systems going from 2 to 4 to 16 to 32 to 64 cores in a single server will have on server shipments over the coming years?
Well, we're still a little bit away from full server 32 core machines going in bulk into the market. But with that said, as long as the prices continue to come down on many core chips, and as long as companies like Intel and AMD have the platforms to support them, I think we're going to see a lot more penetration of many core single servers as long as the price comes down. And it's going to impact the server market, but I think we're still a few years off from that when we're seeing the multi-socket server segment cutting into the prop server market, at least from a price perspective, because those prices are still going to be pretty high.
Great, Christian. Give a second or two to see if anybody else has any additional questions. We'll move on. Thank you, Christian, for answering the questions, and thanks everyone for sending questions in for the webcast. We really enjoyed the interaction and continuing having this dialogue with you. What we want to do is share some upcoming research that Christian's going to be working on in the next quarter around the data center. So if there's any interest from anyone, either to brief Christian on what they are doing with your organization or get more information about how to access these reports, you can reach out either to Christian directly, and I've added his email as well as his Twitter handle, along with John Spooner, who's the director of the computing practice, and Jay McElroy, who runs our sales team. These webinars for our clients every quarter, so we look forward to continuing the dialogue with you throughout the quarter. I'm with the chat function open for another 5 minutes to give folks the chance to ask any additional questions or set up additional conversations with Christian. And we look forward to speaking with you guys all again next quarter.